For more than a century, historians have warned that every empire eventually collapses. Rome did. Britain did. And now, many are asking the same unsettling question about America. Rome took nearly 250 years to fall from its peak, slowly decaying through debt, currency, debasement, political chaos, and endless wars. But what if the same collapse could happen in a fraction of that time? Because when you line up the numbers, the spending, the debt, the money printing, and the political paralysis, something disturbing appears. America isn't just repeating Rome's mistakes, it's compressing them. Faster systems, faster money, faster decline. And when historians started noticing what happened next in Rome's story, the timeline suddenly got a lot shorter. In this video, we're going to follow that path step by step, uncover what most comparisons leave out. See why the real danger isn't that America looks like Rome. It's that America is moving much faster than Rome ever did. Watch until the end, because the final comparison changes everything. And if you want more stories like this that connect history to what's happening right now, make sure you subscribe. Rome didn't collapse overnight. Didn't fall because of one bad emperor, one lost battle, or one reckless decision. It took Rome nearly 250 years to go from the height of its power to final collapse. And that's exactly why most people believe America is safe. They say Rome took centuries. Even if America is declining, it'll take generations. They say we'll see it coming. They say history moves slowly. That assumption may be the most dangerous mistake of all. Because when you strip away the myths, the comforts, and the nostalgia, you discover something unsettling. Every major force that weakened Rome is happening again today, but faster, deeper, and on a scale Rome never experienced. Rome took 250 years to collapse because it lived in a slow world. America lives in a compressed one, and that's why what took Rome centuries could take America just decades. To understand why, we have to start at Rome's peak. Around 200 AD, the Roman Empire looked unstoppable. It controlled territory from Britain to the Middle East. It commanded the largest military the world had ever seen. Its currency was trusted. Its trade network spanned continents. From the outside, Rome appeared eternal. But inside the system, cracks had already formed. Rome was spending an enormous share of its resources on the military. By the 3rd century, roughly 3/4 of imperial spending went toward defending borders, suppressing revolts, and maintaining control over distant provinces. Rome couldn't reduce its army without losing territory, and it couldn't afford to keep expanding forever. The empire was trapped. The United States finds itself in a remarkably similar position. Today, America maintains hundreds of military bases across the globe. Official defense spending is already enormous. But when you add intelligence agencies, veterans benefits, nuclear weapons, and foreign military aid, the real cost exceeds $1 trillion a year. Like Rome, America can't easily pull back without shifting global power to rivals. And like Rome, it can't sustainably afford the burden. Rome responded to this pressure the only way it could: debased its currency. At the start of the 3rd century, the Roman denarius was almost pure silver. Within decades, emperors quietly reduced its silver content. By the late 3rd century, it was nearly worthless. The coin looked the same, but it bought less every year. Soldiers were paid with debased money. Citizens saved in debased money. Wealth slowly transferred upward to those closest to power. Rome didn't call it inflation, but that's exactly what it was. America's version is more sophisticated and more dangerous. In 1971, the United States severed the dollar's link to gold. Since then, the money supply has expanded at an unprecedented pace. Over 98% of the dollar's purchasing power has been lost in just over 50 years. Rome took generations to debase its currency. America did it in half a century. Most people barely noticed. This currency debasement fueled the next parallel: extreme wealth inequality. By the later Roman Empire, wealth was concentrated in the hands of a tiny elite. Senators and aristocrats controlled vast estates, while small farmers and merchants were crushed by inflation and taxation. The middle class slowly disappeared. Ordinary Romans became dependent on state handouts and public entertainment. Bread and circuses replaced civic responsibility. America today shows the same pattern. Wealth concentration is higher than at any point since the Great Depression. The top fraction of society holds an enormous share of assets, while wages for the median worker have barely kept up with inflation. As purchasing power erodes, citizens rely increasingly on government support, stimulus checks, and debt. The mechanisms are different. The result is the same. Political dysfunction accelerated Rome's decline. As Rome weakened, its political system became paralyzed. The Senate lost legitimacy. Emperors rose and fell rapidly. Between 235 and 284 AD, Rome had more than 24 emperors, most of whom were assassinated. Long-term reforms became impossible. Short-term survival replaced strategy. America's political system hasn't reached that level of chaos yet, but the warning signs are unmistakable. Gridlock is permanent. Debt continues to rise regardless of which party holds power. Presidents increasingly governed by executive order, only for policies to be reversed years later. Structural problems go unresolved because fixing them would require sacrifice no faction is willing to accept. Rome faced the same dilemma. Raise taxes and risk revolt. Cut spending and lose territory. No. Debase the currency and delay collapse. Every time, Rome chose delay. America has made the same choice. But here's where the timelines diverge and where the danger multiplies. Rome lived in a slow, analog world. Information traveled at the speed of a horse. Economic shocks unfolded over decades. Political changes took generations to ripple through society. Even collapse was gradual. America operates in a digital, financialized, hyper-connected system. Capital moves at the speed of light. Markets reprice instantly. Confidence can vanish in days, not decades. A banking crisis doesn't stay local. It becomes global within hours. Rome could debase its currency quietly for years before consequences became unbearable. America's monetary shifts are amplified instantly across the world. Rome's debt was largely internal. America's debt is global. Foreign governments, pension funds, banks, institutions, all hold U.S. debt. When confidence in the dollar weakens, the consequences ripple through every financial system on Earth. Rome's problems stayed mostly within its borders. America's problems don't. And perhaps the most critical difference of all, Rome's elites were trapped inside the empire. If Rome fell, they fell with it. America's elites are not trapped. Wealth today is mobile. Assets can be moved across borders. Corporations operate globally. The people closest to power have exit strategies. When systems weaken, those at the top can leave, hedge, or protect themselves in ways ordinary citizens cannot. This accelerates decline. Rome's collapse took centuries because its systems resisted rapid change. America's systems amplify it. Rome didn't collapse because people predicted it. It collapsed because it ignored the mathematics of debt, currency, and power. America faces the same math but compressed into a much shorter time frame. From 1971 to today, the United States has replicated many of Rome's failures in just over 50 years. The remaining stages don't require centuries. They require only one major shock: a debt crisis, a currency crisis, or a geopolitical rupture that exposes how fragile the system has become. Rome teaches us something critical, not that collapse is inevitable, but that denial accelerates it. Rome didn't fall because it was weak. It fell because it was powerful, complacent, and convinced it had more time than it actually did. That's the real lesson. Rome had centuries. America may have decades. Understanding that difference may be the most important financial insight of our lifetime. If you want to understand how history really works, not the myths, not the slogans, but the patterns, subscribe to the channel, because the next chapter of this story is already being written.